Circular flow of income seems easy until the tricky MCQs appear. Injections, withdrawals, and equilibrium are exactly where many A-level students lose marks. Let's try a few past paper questions to clear the concepts step by step. Let's read question 1 carefully. What is always regarded as a cause rather than a consequence of a change in the circular flow of income? And these are the options given to us. Now we are looking for something that is a cause, not a consequence of changes in the circular flow. Remember, injections cause changes while consumption, savings, and taxes usually depend on income. Now let's check our option A. Option A says a decrease in government tax revenue. Now this happens when income falls. So this is a consequence. Let's go to option B, an increase in consumption. Consumption rises when income rises. Again, it's a consequence. Option C is an increase in savings. Savings also depend on income, so this is also a consequence. The last option is increase in the value of exports. Now remember, exports are an injection. More exports bring income into the economy and cause income to rise. So the correct answer is option D. Let's look at the question number 2. In the circular flow of income model of an economy, these are the variables that represent all this. I hope you know the full forms of all the variables. Now we have to find out which statement is correct. This question tests the equilibrium condition in the circular flow. Remember, injections equal to withdrawals. That is your I plus G plus X, which is your investment plus government spending plus exports, should be equal to savings plus taxes plus imports. Now let's check each option. Now option A, this option says at equilibrium the levels of Y and C are always the same. It means they are telling us that income and consumption are always same, which is not correct. Income is divided into consumption plus savings and taxes. So it is equal to C plus S plus T and not just C. So this option is not correct. Let's go to option B. Governments always adjust G so that the economy is in equilibrium. Again, it's not a necessary condition. Equilibrium happens when injections equal withdrawals, not because governments adjust government spending. So this also doesn't make any sense. Now let's go to option D. Option D says that if the national income is in equilibrium, X must be equal to M, meaning exports must be equal to M. Again, exports must equal imports is not a required condition. Only total injections must equal total withdrawals. Then we are left with option C. If I is not equal to S, it is still possible for the national income to be in equilibrium. Now this option seems to be correct. It is correct option. Equilibrium in the circular flow depends on total injections and total withdrawals, not individual components. The condition is I plus G plus X should be equal to S plus T plus M. So even if investment is not equal to savings, government spending or exports can offset the difference. For example, if I is less than S, equilibrium can still occur if G plus X are higher. Or if I is greater than S, higher taxes or imports can balance it. So I does not have to equal S individually. Only total injections must equal total withdrawals. This is the reason option C is correct. So the correct answer is option C. Question 3 says, based on the circular flow of income, which condition is necessary for an open economy to be in equilibrium? Now what we need to pay attention to open. Open means it's a 4-sector model. And this question is also directly testing the equilibrium condition. For equilibrium, we know total injections must equal total withdrawals. Now let's check option A. Option A says that government investment is equal to private investment. It's not required. They don't have to be equal for the equilibrium. Okay. Let's go to option C. Option C says spending by households is equal to taxes collected by government. Again, it's not necessary. These are very unrelated components. Yes, your spending means your consumption or household's consumption does not have to be equal to the taxes collected by the government. So this option also doesn't make any sense. If we go to option D, which says that value of export earnings is equal to expenditure on imports. Now, export equal import, again, that is not a required thing. Only totals must be equal to each other. We cannot say that if one variable is not is equal to the other variable, that means it's a equilibrium. So this option is also not correct. The only option left with us is option B, which says that planned injections are equal to planned withdrawals. This is exactly the definition. This is exactly the equilibrium condition. So this option is correct. So the correct answer is option B. Now let's look at question 4. Question 4 says, what is most likely to increase a country's circular flow of income? These are the options given. Now this question wants to test us what increases the circular flow of income. Remember, the circular flow increases when injections increase or withdrawals decrease. So let's check the different options. If I look at option B says its imports increase. Now imports are a withdrawal. More imports mean money leaves the economy. So this will reduce the national income. So this option is not correct. If I go to option C, which is its interest rates increase. Now higher interest rates means it will reduce borrowing and it will lower investment. When investment falls, so injections fall. So this option is also not correct. If we check option D, which is its exchange rate increases, now currency appreciation makes exports fall and imports rise. So both will then reduce the circular flow. So this option is also not correct. Now if we go to option A, which says its budget deficit increases, that is the correct option, because a budget deficit means that government spending will be greater than taxes. This will add money into the economy. It's an injection. So this increases the circular flow. So the correct option for this answer is option A. Now question number 5, I have picked a numerical equilibrium question because this is also quite common in the past papers. So here, when we are given this type of information that you have all different variables given to us and they want us to find out the equilibrium level of national income, you just have to use the rule that injections equal to withdrawals. Now first we need to calculate total injections. So total injections means your investment, exports and government expenditure are your injections. Your savings, your imports and your taxation are your withdrawals. Now let's check. At 600 national income, what is your total injections? So you will add 200 plus 100 plus 50, which is 350. Now if you see 350 is for each level. Yes, now we have to look at withdrawals. At 600 million, your withdrawals are 125 plus 62.5 plus 62.5, which is just 250. It means injections are 350, but withdrawals are 250. It means this is not a equilibrium national income level. This way you will do for each level at 700, at 800 and at 900. Okay. When you will check this, you will find that at 800 million national income, your injections and withdrawals are equal. And you will add 175, 87.5, 87.5, you will get 350. Therefore, the correct option is option C, which is $800 million. If this helped, subscribe for more economics exam tips and MCQs.